Hi, this is Joel, and thanks for checking out the Okanagan Investment Club. Today I'm just going to talk a little bit about investing in real estate with your RRSPs. Now, we actually just closed on a deal a couple of weeks ago where we had a private investor come in, and we used their RRSPs and placed a mortgage on the property in second position, so a second mortgage. So that's a really good option because most people who have invested in mutual funds over the last little while just got hammered with their RRSPs. And the really terrible thing about that whole thing is most of these funds, I don't know the percentage, but the majority of funds all went down. And the most disturbing part about the whole thing is that there's something called the management expense ratio. So that means that the people managing these funds, even though everyone's losing their money, they're still making their fee and making money off it. So that's kind of my pet peeve with mutual funds and RRSP investing, but the better option is to invest in real estate because you can be secured by a mortgage. So, typically private equity lenders will invest up to 75% loan to value on a real estate transaction, right? So why couldn't you do that with your RRSPs? Or people who have development property, when they're looking to borrow against it, they create a bunch of value, get some approvals in place, and lenders typically will lend 50% loan to value on raw land. So what you could do is you could be an investor with your RRSPs, place a mortgage on there in first, second position or whatever, and finally here's an opportunity where you can make a double-digit return with your RRSPs or your 401k, whatever it is, if you're in the States or if you're in Canada. So I just want you to be aware of that. So what we've done with the club, so what you can do is you can go to www.okanaganinvestmentclub.com, and in the downloads section I've put a document in there that's from the Canada Revenue Agency, and the rules are very similar in the States, but it's just the meaning of arm's length. So it's only a two-page document, so you go in there and this will tell you exactly what you can and you can't do with your RRSPs. Because what you can't do is you can't take your own RRSPs and go put a down payment on your own property. So there's some rules with that. But if you're investing in someone else's property outside of your family, you're allowed to use your RRSPs, or you can set it up in a company. But we can get into that at a further time if you'd like to talk to me about investing RRSPs in anything, or you can do it the other way too, right? So what my family's done in the past is use their RRSPs to invest in other property, or we've borrowed other people's RRSPs from private investors to fund our deal. So there's a couple options, and a lot of the time if you're looking at development property or if it's secured by a mortgage that is 75% loan to value, a lot of people are willing to pay 10, 12, 15, 18% to take some equity out of the property. So go to the club, download the meaning of arm's length, contact me if you want to talk about RRSP investing. Check out the club, www.okanaganinvestmentclub.com, or send me an email, joel@okanaganinvestmentclub.com. Thanks for checking out the video. I'll see you soon.